In today's video, I'm going to explain to you a very powerful legacy planning tool that could help you pass down hundreds of thousands, if not millions of dollars tax-free to your heirs and beneficiaries. I'm Raul Shah. I'm the CEO of DocShah Financial. We are a wealth management practice that helps retirees and pre-retirees pay way less in tax than they otherwise need to. The slides you're seeing are directly from the retirement planning course that I teach at Johns Hopkins University, which is also my alma mater.
Swimming in it. I love to dive around in it like a pool.
So the secret to passing down hundreds of thousands or millions tax-free to your heirs involves the brokerage account and understanding the stepped-up basis. The stepped-up basis is very simple, and it involves two numbers, your cost basis, and it involves 2 points in time: the time that you make an investment and the time that you pass away. And it's probably best explained using an example. So if you look at the bottom left side of the screen, I'll walk you through a very quick and easy example. Let's say that you buy $50,000 of a stock in your brokerage account. Now let's say that when you pass away, that stock is worth $200,000. Well, your heirs who inherit that account don't have $50,000 as their cost basis. Their cost basis is actually $200,000. And that is the stepped up basis. When you pass away and you are giving your brokerage account to your heirs, all of the gains in that account get wiped out because the cost basis gets raised to the fair market value on the date of your death. The result is that the heirs who inherit your brokerage account get to do so without paying any capital gains. All the capital gains are wiped out once that cost basis rises to fair market value. It's a beautiful tax planning and legacy planning tool that I talk about with clients all the time. I work with retirees and pre-retirees who want to know, how can I pass down the most to my children and make sure that they get exactly what I want them to get? And most people never even consider this because they don't know how a brokerage account is inherited. Most people are parking money in their tax deferred accounts like their traditional IRA. They write down their beneficiaries on the account and whatever happens, happens. Let me explain to you why that may not be the best idea and why really good tax and legacy planning makes a world of difference. Let's say that you have $1 million in your traditional IRA account, and let's just say you have one son. Well, ultimately, when you pass and your son inherits that traditional IRA account, if he's successful the same way that you were likely very successful, he might wind up paying a lot in taxes and not get to keep much for himself. If your son is in the 37% federal marginal tax bracket, and he inherits your traditional IRA, every dollar he takes out of that traditional IRA is taxed as ordinary income. So he's going to pay 37 cents to the government for every dollar that he takes out of that traditional IRA. And that's excluding state tax. If he lives in California and he's in their highest tax bracket, boom, that's 50% gone right out of your traditional IRA. Half of the money that you wanted to leave to your son is gone to taxes, and he only gets to keep half. Now contrast this with if you had $1 million in a brokerage account. It doesn't matter how big the gain is, how long you had the account, how long you own the stock, everything gets passed to your son with the stepped up basis, meaning the gains get wiped clean. So he could inherit $1 million from your brokerage account and pay zero tax. You compare that to inheriting $1 million from his traditional IRA account at a 50% tax rate overall. He's only going to get to keep $500,000, and the other $500,000 will go to the IRS. So you can clearly see the brokerage account is a wonderful tax and legacy planning tool that very few people ever really consider or utilize or take advantage of. That's why one of the most important things I talk about with clients at DocShah Financial is, who do you want to inherit your account? And how much do you want them to inherit? And from there, we can really plan and work with the different types of accounts, your tax deferred account, your taxable or your brokerage account, and your tax-free accounts, and really figure out, okay, how can we make sure that you pass the most to who matters the most to you? One other thing I'll mention too is that Roth accounts, like a Roth IRA account, do not have the step up in basis because it doesn't apply there. All of the gains and withdrawals are already tax-free. So what we're really doing is looking at the brokerage or taxable account versus a traditional IRA or tax deferred account. We're trying to calculate, where do we want to put money and what types of investments do we want to make in these accounts to make sure that we pass the most after-tax money to our heirs. I'll give you another tax planning tip that I use with clients that you can consider for yourself. Let's say you're 55 years old and you're in good health. Maybe you expect to live 20, 25, 30 more years, reasonably speaking, and you want to pass on a lot of after tax money to your heirs. Well, we can look at your total financial plan and we can say, hey, you're covered with your retirement accounts. You guys should be good there. You have enough money. We have a good asset allocation there. Everything should be fine in the long run. Maybe we be a little aggressive in your brokerage account and maybe we contribute funds to that account and buy more growth oriented investments like individual growth stocks or growth ETFs. And the idea behind that is that account we're not going to touch. We're going to let that compound over the remainder of your life. Maybe that's 20, 25, 30 years. And then when your heirs inherit that account, they might wind up with a very large capital gain that gets completely wiped out, and you could set them up for the rest of their life. So that's the beauty of really good financial planning. We can really sit there and figure out what accounts do we want to prioritize, what do we put in these accounts, who gets those accounts, and how are they going to inherit them, and how do we make sure that they get the most out of everything that you've built. If you would like to discuss this strategy or any of the other tax planning strategies that I've talked about on this channel with me personally, just shoot me an email, raul@docshahfinancial.com. I'd love to hear from you and your personal situation. Otherwise, subscribe and I'll see you in the next video.